All right, let's talk about Warrior Met Coal. You see the question right there? Is this a contrarian's bet? We're diving into an industry that, let's be honest, most people have completely written off coal. But this isn't just any old coal company. This is a really high stakes play. And it's for a very specific kind of investor. So let's get into the story. So, right off the bat, you have to be asking yourself, why on earth would anyone invest in a coal company in the 2020s? I mean, seriously, with the whole world pushing towards decarbonization, it kind of sounds like betting on the horse and buggy after the Model T came out, right? But what if not all coal is the same? That's the question at the heart of this whole thing. Okay, so let's get one thing straight. Warrior Met Coal, ticker HCC, isn't mining the stuff you burn in power plants. That's thermal coal. No, they're in the business of metallurgical coal, or met coal. It's a super high quality, absolutely essential ingredient for making brand new steel. So you gotta think of it less like a fuel and more like a critical raw material. Without this stuff, you just can't build skyscrapers, you can't build cars, you can't even build wind turbines. So here's where the story gets really interesting. You need to understand where this company came from. This isn't some tale of slow and steady growth. Oh no. It's a story of pure survival and transformation. Its competitive advantages, what investors call a moat to protect its business, well, they were literally forged in the fires of bankruptcy. And man, what a wild ride it's been. Look at this timeline. The company basically rose from the ashes of another company's bankruptcy in 2016. A year later, bam, it goes public. And then it gets immediately tested by this brutal 22-month-long union strike. I mean, that's almost 2 years. And now? Now they've emerged and pivoted into aggressive growth mode. Every single one of these steps was like a trial by fire, and it's what forged the tough, resilient company we're looking at today. So, when we throw around that term moat, what we're really talking about is a lasting advantage that protects a company from its competition. And for Warrior, this wasn't something they just stumbled into. It was built directly out of that crisis. They had to slash costs, completely restructure their labor deals, and just get laser focused on one thing, being the most efficient, lowest cost producer they could possibly be. And this right here, this is the result of all that pain. They are a first quartile producer. Now, what does that mean? It means they're in the top 25%, the absolute cheapest met coal miners in the entire US. And a crazy up and down business like this, that is everything. It's their superpower. When prices for coal are sky high, they make an absolute fortune. And when prices inevitably crash, they survive, while their more expensive competitors go out of business. So how exactly did they build this superpower? Well, it's basically a 4-part playbook. First, they are laser-focused only on that high-quality met coal for steel. Second, they have that super lean cost structure that came from the bankruptcy. Third, they've got a flexible mine plan so they can ramp up or down with the market. And finally, a huge logistical advantage. Their mines are really close to an export port. You put it all together, and you've got a business model that is built for one thing: survival. Okay, so the company proved it could survive. It's tough, it's resilient, but now they're shifting from just playing defense to playing offense. And they're doing it with one single, absolutely massive bet on their future. And that bet is called the Blue Creek Mine. This is a brand new, game-changing project. And honestly, most impressive part of this whole thing? They're paying for it all themselves. They're funding this massive investment entirely from their own cash flow. That means no new debt, no issuing new stock. They are literally building their future with the profits they're making right now. That's pretty rare. And just look at the scale of this bet. We're talking about a potential 75% increase in their annual production. I mean, think about that. This isn't some small adjustment. This is a move designed to completely transform Warrior from a solid, mid-sized company into a major global supplier for decades into the future. And look, this isn't some fantasy on a PowerPoint slide. It's happening. They are hitting their milestones. The project was approved, construction is well underway, and they're on track for their first commercial sales in the second quarter of 2025. Then, the real heart of the mine, the longwall, kicks in early 2026. This is a real project, moving forward on schedule. So, what does Blue Creek actually unlock for them? Well, it's not just about digging up more coal. It's about a total transformation. For starters, it extends the company's entire lifespan by an estimated 40 years. It adds a new, very desirable type of coal to their product mix. And get this, it's projected to potentially double the company's core earnings, their EBITDA. This is what solidifies their spot as a major global player. All right, so a massive growth project in let's call it a controversial industry. This is where it gets really juicy for any potential investor, right? It's time to stack up those potential rewards against some very, very real risks. And this right here is the investor's dilemma, laid out plain and simple. The bull case? It's pretty straightforward. You've got this super low-cost producer with a huge growth project that's already paid for, and it feels like the market's just not paying attention. But the bear case is just as strong. I mean, this company is a hostage to insane price swings. They have a contentious labor history, they have to pull off this massive construction project perfectly, and all of this is happening under the big, dark cloud of ESG concerns about coal in general. And let's be crystal clear, the number one risk is price volatility. Just look at this chart. The average price they got for their coal went from about $113 a ton in 2020 to $335 in 2022. It tripled. And then, boom, it's projected to fall back again. Trying to navigate this kind of boom and bust world, well, it's definitely not for the faint of heart. But here's how they're trying to manage some of that craziness. They don't sell to just one place. You can see here their sales are spread out all over the world. And they've done a really smart thing, pivoting hard to make Asia their biggest market. So as demand from some of the older European steel mills might slow down, Warrior is already shipping its coal to the growing markets in Asia and South America. So, okay, we've looked at the history, we've looked at the massive growth plan, and we've stared the risks right in the face. Where does that leave us? What's the final verdict here? The whole investment thesis really boils down to three key points. 1, this is a battle-tested, super low-cost producer in a tough cyclical industry. 2, they have a crystal clear path to growth with the Blue Creek mine, and it's already paid for. And 3, you've got a management team here that has a history of giving extra cash back to its shareholders, which is always nice to see. And that leads to this classic value investor question. Is this a 10-cent dollar opportunity in disguise? What that means is, because the entire coal industry is so unpopular right now, is the market pricing this company at just a tiny fraction of what it's really worth? Could you be buying a dollar's worth of assets and future earnings for just 10 cents? And that's really the final question we have to leave you with. Is Warrior Met Coal a brilliant contrarian play? An against-the-grain investment that sees massive value where everybody else just sees an industry in decline? Or is it just a really risky bet on an industry whose best days are long gone? At the end of the day, the answer probably lies in the wild, unforgiving cycles of the global steel market.